Could we have any questions from the audience?
That's okay.
Mr. Turan would like to ask.
Mr. Sudhakar, so far you just mentioned about the systemic or structural problems of European economies.
Right.
How can we relate the recent crisis in Europe to the subprime crisis in the States?
Okay. In a sense, they both are kind of related. When he mentions the subprime, in essence, what he's talking about is the fact that the housing market in the United States can actually be divided into three regions. One is the prime sector, which is for the people who have the best credit. Then you actually have a middle sector called the Alt-A sector, which is between the prime and the subprime. But most of the problems have originated in the last sector, the subprime sector, which is the market where you have people with the weakest amount of credit, right? So in the United States, what happened was that the mortgage bankers were fishing in a pond. Think of a pond. Eventually, what happens is that once you catch the most shiny fish, you have to reach deeper and deeper and fish out the bottom feeders. The bottom feeders are the people with the subprime credit. In essence, what happened in the United States was that the mortgage bankers started giving loans away with virtually no documentation. And even in areas such as, even today in areas such as Florida, for instance, in Arizona and so on, many of the housing markets are still extraordinarily depressed. Now, what we are seeing in Spain is pretty much the same sort of thing in terms of what happened in the United States. I don't think we use the term subprime in Spain, but it's in essence basically the same problem. Ireland also had much the same problem with housing markets, right? So the problems are much the same, except that they have their own local flavors.
No, I mean, there is no triggering impact from States to Europe.
I don't think so. In terms of the subprime crisis, the mortgage crisis, that's pretty much being ironed out of the system. Most of the problems with the subprime bonds, occurred. It peaked around about 2007. By about 2008, 2009, most of that detritus has been washed out of the system. But currently, what is happening in Ireland and currently what is happening in Spain are local problems. They have nothing to do with the US subprime market.
Can the Greeks say that?
Please.
We'll come to you after this.
Their problem happened because of Greek banks invested in the US market, and their money was lost because of the US mismanagement. Right. And now the people of people in Greece are made to bear this burden, and that is one of the reasons for the unrest. Is it true that the banks in, as you showed it here, Greek did not have any exposure to US market or other countries' market, but only to their own government, which causes problems?
Right, exactly. I mean, I think that's pretty much what the presentation pointed out, right? That the problems in Greece had nothing whatsoever to do with mismanagement in the Greek banks. The Greek banks were actually very conservatively run. They did not invest in subprime securities. They did not.
Was there exposure in the US market? Or
no, there wasn't. Very, very little actually. Very, very little. You must remember that Greece is like Rhode Island in the United States. It's actually nothing. It could be consumed by the smallest state in the United States.
But this is also the price that you have to pay for democracy. You see, in democracy, of course, the government, they start borrowing lots of money, and at one time they reach to a position they cannot even serve their debt. So serving the debt is very important. This is what happened in Greece. That they borrowed so much money, they reached to a stage, and remember, I mean, compared to other European countries, what does Greece have? It's still only the history. And most of the people, when they go to Greece, they go as a tourist. But in terms of, let's say, industry and trade and business, Greece is not really as solid as
good olive oil.
Other countries. So that's why the government borrows so much money. And as I mentioned before, the problem if you compare it to Argentina, because then you know Argentina actually it's happened the same thing.
Absolutely.
But Argentina was able really to come back, but at what cost? at the cost of devaluating their, we simply mean billions of dollars that owned by the public has been lost. But they were able to restructure. That's part of the restructuring of their economic system. And that's what I said, that if Greece could declare bankruptcy, then they can restructure the whole things. General Motors did that, and now they are up. You see? So that's what they can do. But the problems of Greeks, of course, today is that they are part of the euro, and then there is a pressure on Greece from other countries. Because if one member leaves, what will happen to the whole community? You see, that could have a negative impact. You know, the whole trust in this whole European community, it will be lost.
But one thing, just one thing to remember, Greece, Spain, and Ireland, which are causing really a problem today, they account only for about 6% of EU GDP. So, you know, the first thought is how could so little make such a great impact on the whole EU? But you know, one thing
Exactly what you are pointing out about the
which is you are as strong as your weakest link. So it doesn't matter if the Germans are strong or the French are relatively strong, but if there is a little country or a little company, whatever you want to call it, it will cause you all kinds of problems because the system is really integrated. So it's people and policymakers, they really have to pay attention to these. They cannot overlook these these countries or these regions and brush them off, because they can have a great impact.
Can we have you at the back here?
Yes, I have two questions. The first one, can we consider the common currency in the Eurozone as a reason that lead for debt crisis?
I would say yes, absolutely. An unambiguous yes to that question. In two ways. In essence, I think what happened was that the introduction of the euro led to the reason why interest rates actually fell. Before, if you look at the history before the euro was introduced, interest rates were much, much higher. After the euro was introduced, interest rates actually fell, and that led to all the debt binge and so on that we are talking about. The second reason why the euro contributed to the crisis was what I already pointed out, the fact that you have a bunch of countries that are yoked together. It's like all of us standing together in a circle, holding hands. I push Subhadra down, she pushes Gary down, and then pretty soon all of us come crashing down. A very homemade analogy, sorry.
Yeah, but except to me, frankly speaking, if it had contributed to the debt crisis, only from the point of view of denying the Greece government of using devaluation as a tool to.
Right.
It's not a real cause. It's a denial. Well, I have a number of tools to deal with the crisis and the budget deficit, and one of these tools, which is currency, has been taken off from my kit, and that's the denial only, but not the cause, the root cause of that.
Can we have Nima there?
I have a second question.
You have another question.
How the GCC countries can face this global crisis in the case of reduction in the oil revenue?
I think panelists are probably in a much better position to answer that than I am.
Yeah.
Well, anyone can answer.
Yeah, of course, oil prices are very important. As I mentioned, that a recession in Europe could have a negative impact on the prices of oil, which simply mean will have a direct impact on the revenues of these countries. But these countries, of course, they have to protect themselves, because today we live in this age of financial globalization, and somehow these countries have become an integral part of the global economy itself. And if you take into consideration the trade they have with Europe, and then the various kind of investment they have in Europe, they would not be able to avoid whatever will happen in Europe. So definitely it will have a negative impact on the economies of these countries.
I think just to add to your comments, as soon as the barrels of oil is above $100, I think the GCC country will do fine, because you cannot go broke if you pay in cash. and if you're not in debts, you have no problem with debts. But if barrels of oil goes under $40, then
No, but you are a consumer, you're not a producer. That's the problem. So it's a two-way thread. You need the export, but at the same time you need the import. I mean, I read in the newspaper, 95% of what is consumed in this part of the world is basically imported from outside. So any reduction in income will have a direct impact on your ability to import. And that will reduce your standard of
living. It has a bigger impact on the government to spend. It's had bigger effects on GDP as well.
The government, do you think the government will care?
We will have to come back to this later on. I can only take two
One
questions.
comment, small comments.
Okay.
To me, two of GCC countries are in deep crisis in terms of budget deficit. Oman and Bahrain. Yeah, you cannot deny that government is borrowing in both countries. They have budget deficit. Saudi and I don't want to mention the country, but these other countries are away a little bit. But these countries have to deal with the budget deficit to reduce it, then to reduce the borrowing of the government is what I was talking about. Is to be more innovative, to reduce the government intervention in the economy, and push more private sector leadership, be more open to attract more investment, be more innovative to introduce a new economy, a new sector, a new activities, which was not happening. And even I don't know when it is whether we are losing whether the European losing their competitiveness to the Chinese, yes, or Indian. But this happened even in the history. The British, they lose their competitiveness in textile to the Indian. But what will they have to do? They start innovating, introducing new activities, introducing a new product, where they have a competitive edge. And this is what's not happening now in the US economy. They're not producing, we don't see new activities, new economies. Only the last thing we have seen, blue chip, blah, blah, and then things stop. Even only we are talking about nanos and all these things, but not on a mass or on a big scale.
Can we have thank you very much. Can we have Nima Al-Mullah from HSBC?
Hi, Doctor. I have a question.
Sure.
We had Barack Obama a few days back saying that you guys, you need to get your act together,
right,
because we are having a sluggish economy.
Right.
And then you have the G7 countries suddenly after Barack Obama gave his speech,
Right,
saying that okay, we need to come together.
Right.
And then you have the Japanese economy where their yen is appreciating so much, like
Right.
listen guys, our exports are becoming more expensive.
Right.
So I mean, it's sort of rather a selfish G7 countries right now coming together just because of having this situation sort of being elevated at this point in time.
Right.
I was just wondering as to why they haven't really taken the measures beforehand, and what is the sort of support we're going to get from the G7 countries to sort of remedy this sort of crisis that's going to be a sort of contagion effect on all the countries even outside the Eurozone.
I think from what I understand your question to be, could some of this not be foreseen? Is that
Absolutely.
what you're essentially asking?
You have such strong countries with central banks which are supposed to be sort of foreseeing these problems, and
Right.
we don't really see that coming through.
Right. Okay, I think that's actually an excellent question. The issue with currently what's happening in terms of the bank runs that we are beginning to see in Greece, it's essentially the logical consequence of what happens when an entire economic system kind of collapses, right? So one would wonder, how come they had not foreseen this? Of course they foresaw that. The problem is that who is responsible for the Greek monetary system? It's not the ECB, it is the Greek central bank, right? The problem is that goes back to what we were talking about fragmented authorities in terms of the division of monetary authority. The ECB can't step in and issue unlimited amount of euros The Greek National Bank is responsible for Greek monetary policy. So if there is eventually a run on Greek banks and all the euros are depleted, there's only a certain level to which the European Central Bank can step in. Beyond a certain point, they just throw up their hands and say, so be it, let the banks go bust. But the fact of, but the deposit runs is something that is hardly unforeseen. It's essentially the logical consequence of what happens when currency systems crash. But the issue in terms of why wasn't this addressed, it can't be addressed within the existing framework. That's the whole point.
Would any other panelists like to address?
We have Mr. Vishai from ABC. Who would like to?
Thank you very much. That's a great presentation. I have several questions, but I'll ask only one question. Looking at the European crisis.
Right.
On the one hand, there's austerity.
Right.
Okay. The other hand is growth.
Right.
The way that we measure, all the indicators, we divided by growth, that denominated by growth, by GDP.
Right.
So basically, we already imply that we need growth.
Right.
Now, my question is, if tomorrow I have an appointment that Merkel is going to call me,
Merkel.
The chancellor.
Right.
She said, okay, well, Vishai,
right.
Can you recommend me 3 things to handle or to promote the growth in the whole European Union? Because now the pendulum swing from austerity to growth. Tell me some solution. Just 3 solutions so that I can address in the public.
Okay. I'm not that familiar with what's going on in Europe. I do know what's going on in the United States, but I feel that the problems are essentially kind of similar. You really can't go wrong by using the buzzword structural reforms. But
yeah, I mean that's a big word, in the IMF and World Bank style.
Right. I used to do structural reforms for the World Bank. Actually, I was involved in structural reform programs. The first thing, the most important thing that I feel in the United States system itself is to reform the tax system. This is, to me, essentially a no-brainer. Everyone agrees that the tax system is badly broken, but no one wants to do it because there's lack of political will. But fixing the tax system would be, according to me, the first and the most important step towards enhancing growth. The second thing in terms of enhancing competitiveness would be infrastructural investment. Currently, you can borrow at less than 2% for 10 years. The issue is, there is productive debt and there's unproductive debt. Take on the productive debt and have a second Eisenhower administration. What the Eisenhower administration did was they built all the highways in the 1950s, and those highways, are basically the arterial system in the United States even today.
Can we apply that to Europe?
I'm sure that.
I mean, or the solution, like you address about the tax,
Right.
The tax. That's the reason why they addressed austerity.
Right.
And now the whole talks about you didn't pay tax. You didn't pay like for so long.
Right.
In your presentation, if you take all the doctor degrees,
right.
Everybody will be in jail.
Right.
So now they come back to the so-called contractionary fiscal expansion.
Right.
If some theoretical like papers try to believe that if you really increasing tax, tax more,
right.
you can somehow expand growth.
Right.
But they didn't address how long it will take.
Right.
See, now the immediate thing is growth. Now the one you address here, I'm sure, the infrastructure investment.
Right.
Can we really apply to Europe? I mean, because you address about
infrastructure investment is basically another no-brainer. It can be applied to any country in the world.
No, I mean, in terms of practical, can we do it in Europe now?
But this one will not work, Dr. Vishai, because now the people are bankrupt and the government is bankrupt.
Yes,
both of them. So where are you going to get the money in order for the government
now
to spend?
we really stuck. Still stuck in the sense of now we want to put the money up front. Who's going to put that? So all the country will just run out of money.
Right.
So that's the issue. I said, well, people, all the great economists, try to address that. We need growth. Fine. I totally agree. But how? Nobody just really addressed that, and that's the big words that people talk structural.
I think he chopped out a program. Basically, get rid of the euro and start issuing your own currency. Go back to the drachma. It seems the only plausible way of doing it.
And I believe that's the way to do. But to do that one, the transition will be a big impact. Since now we don't know how the impact going to widespread. It's not just Europe itself. It will go to Brazil. All the brick will turn out to be a broken brick. You know, so Brazil will collapse. Chinese will got impact. India will be, face another crisis. That's the reason why we are so afraid of, like even Greek exit, Portugal maybe, Spain maybe, or I mean these kind of things that I think that's the reason why I address this kind of straightforward question. How to promote.
We have Dr. Zakaria who wants to say.
Well, just one thing about, I believe, strongly believe, that all of us, we know what is the deficiency in the GDP as a measure for growth and income distribution, and we know this deficiency. And given the connectivity in the world, given what is we've been passing through, I think so we need a new mindset to look to the economy, a new look to the indicators that we are using to measure the progress, to measure the growth, to measure the income distribution. I think so we need something structurally change, not only on our industry or services, etc., but even in our thinking is to measure wealth, to measure growth, to measure happiness. Is happiness contributing to higher productivity, to growth rate?
Sorry to interrupt. Nepal actually doesn't have a GDP.
Nothing. That's I think so. Given what we are passing through, and given the magnitude of deficiency in our budget deficit, not in Bahrain but in all over the world, new look.
And it was
structural.
It was interesting that Mugabe is the one who really came with this concept of happiness. He said, we're talking about money, what does really mean? Ask my people, are they happy or not? If they say yes, then forget about the United States.
We have one last question from the gentleman.
Okay, thank you, Professor. My question, you have mentioned in your presentation that the crisis now in Spain, in Greece, Spain, and it's going to continue on the Europe continent.
Right.
And you have alerted us that it could be another crisis which might spread all over the world.
Sorry, come again? Is there another crisis that you...
Yeah, is it a spark for another crisis to the world? Yes, you have mentioned that. Could you elaborate, please, on that?
I have very strong opinions on that one. But again, this is a bit of a US-centric opinion. Many of the states in the United States are essentially bankrupt. California is bankrupt. California's bonds were downgraded. The state of Illinois is essentially bankrupt. The state of New Jersey is bankrupt. Now, this might seem like a very US-centric viewpoint, but you must remember that if you take a look at the state of California, in terms of the amount of GDP that California generates, California is ranked among the 7th largest country in the world. So the next crisis, I think, is a crisis where many of the states in the United States could potentially go bankrupt. And that could lead to another systemic crisis.
Thank you for your question, Mr. Smith. With this, we'll have to come to an end to the discussion and the seminar. But before we go, I would like to invite Dr. Zakaria to present some gifts on behalf of the Wien Center to the speakers. First, can we invite Professor Sudhakar Raju to receive the gift?
Thank you.
Doctor.
Can I now request Dr. Andrew? Finally, Mr. Bench, thank you so much. Before we close, thank you very much. Before we close, I would like to invite Mr. Gary Muriwai, Director of BIBF, to say a few words.
It'll be a very few words because time is marching on. I just wanted to again thank the speakers and panel. A lot of the amazingly good questions, amazingly good answers. Some things I agree with, some things I don't. The pity is that we don't have enough time to keep going, because over the last little while I've had discussions in the US and I've had discussions in Doha.